Before we begin, I want you to take a breath and notice something quietly true. Most traders believe their progress is measured by wins and losses, by how much they made this week, by whether the last trade was green or red, by the outcome they can see rather than the process they can't. But the market doesn't reward outcomes, it rewards consistency. And consistency is born from the decisions you make, not the results they produce. A good trade can lose, a bad trade can win, and if you judge yourself by outcomes, you will never see the difference. Outcome bias is the invisible force that convinces you that results are truth, that randomness is feedback, that the market is judging you every time a candle closes. But what if it isn't? What if the market isn't evaluating you at all? What if the only thing that truly matters is the integrity of your process? In this session, I want to take you deeper beyond the illusion of results, beyond the noise of short-term outcomes, into the mindset that separates luck from skill and randomness from mastery. This is Mind Over Markets. Let's begin. I want to start with a truth I avoided for years, a truth most traders never dare to confront. A good decision can lose, and a bad decision can win. Yet for most of my trading life, I judge myself by outcomes, by the PL, by the color of the candle when the trade closed, by whether the market rewarded me or punished me. I thought wins meant I was improving, and losses meant I was failing. But I didn't realize how dangerous that belief was, how deeply it distorted my judgment, how quietly it shaped the trader I was becoming. I didn't understand outcome bias. Outcome bias is the mental trap that makes the result of a decision more important than the quality of the decision itself. It convinces you that a win is proof of skill and a loss is proof of incompetence, even when neither is true. For years, this bias lived inside me silently. I didn't know its name. I didn't know its consequences. I didn't know how deeply it was carving my psychology trade after trade, day after day. All I knew was this. When I won, I felt proud, confident, certain that I was right. And when I lost, I felt doubt, shame, confusion, fear that I had done something terribly wrong. I believed my emotions were justified because the chart confirmed it. Win equals good, loss equals bad. It all made sense until it didn't. It took one moment, a moment so subtle I almost missed it, to reveal the illusion. I remember entering a trade that violated every rule in my plan. It wasn't my setup, it wasn't my zone, it wasn't my timing, it wasn't my structure. I entered simply because I felt FOMO. I remember the heat in my chest, the rush of urgency, the fear of missing out. I knew it was a bad decision the moment I clicked the button, and then the market moved in my favor. The trade went green. It hit target. And as the candles climbed, something even more dangerous happened inside me. A voice whispered, maybe it wasn't such a bad idea. Maybe you were right. Maybe your instincts are improving. That whisper, that tiny seductive whisper, was outcome bias. It wasn't congratulating me. It was corrupting me. It was teaching me that breaking my rules was okay as long as the market rewarded me. It was reinforcing a behavior that would destroy me later. But I didn't see the danger. I only saw the profit. And profit felt like truth. A part of me changed that day, a part I wasn't aware of yet. I began trusting emotion over structure. I began believing luck was skill. I began thinking the market validated my impulses. Outcome bias shaped my identity as a trader without me realizing it. And then came the opposite moment, the one that finally broke the illusion. I executed a trade that checked every box: clear structure, confirmed level, quality setup, planned entry, defined risk, perfect execution, and it lost. A clean, flawless, disciplined trade ended in a red candle. But the loss itself wasn't what hurt. What hurt was how quickly my mind turned against me. Suddenly the doubt returned, the shame, the sense of personal failure, the urge to rewrite my plan because the outcome didn't validate me. I wasn't judging the trade, I was judging myself. Outcome. Bias whispered again, but this time with cruelty. You lost, so you must have done something wrong. But I hadn't. The trade was perfect. The execution was precise. The logic was clean. The only thing that wasn't on my side was variance, the natural randomness that exists in every probabilistic environment. But I didn't know that. I didn't understand it. All I could see was the result. And so I blame myself for doing the right thing. This is how outcome bias breaks traders. Win with a bad decision, and the mind gives you false confidence. Lose with a good decision, and the mind takes your confidence away. Outcome. Bias punishes discipline and rewards impulsiveness. It makes randomness feel like feedback. It makes luck feel like skill. It makes skill feel like failure. It convinces you that your worth as a trader is tied to the last candle of your last trade. I remember sitting in front of my screen feeling confused, frustrated, and exhausted. I didn't know what was real anymore. I didn't know what part of my judgment was actually mine and what part was shaped by outcomes. I thought I was learning from the market, but I wasn't. I was learning from results, and results are noise. Process is signal. But I couldn't see that yet. Outcome bias had blinded me to the difference between the two. When I look back now, I realize how deeply this bias affected everything. My confidence, my discipline, my ability to stick to a plan, my emotional stability, my understanding of probability, my relationship with myself. Every win inflated me. Every loss deflated me. I wasn't evolving. I was oscillating, swinging between highs and lows based on randomness I didn't understand. And that cycle nearly destroyed my trading career. It wasn't until much later that I understood the truth. You cannot grow if you treat every win as proof and every loss as punishment. You cannot evolve while tied to the results of individual trades. You cannot build consistency when your identity rises and falls with every outcome. Outcome bias is the enemy of long-term mastery. And until I confronted it, I couldn't see the market clearly. I couldn't see myself clearly. In part 2, I want to take you deeper into the psychology behind this bias, why the mind clings to outcomes, why wins feel like validation, why losses feel like identity, and why judging yourself by results is the most destructive habit a trader can develop. The deeper I looked into my own reactions, the more I realized something unsettling. I wasn't responding to the quality of my decisions. I was responding to the emotional weight of the outcome. My mind didn't care if I followed my plan. It didn't care if my entry was clean, my risk defined, my structure sound. It only cared whether the result felt good or felt bad. That was the only metric it understood. This is the core of outcome bias, a psychological shortcut that substitutes emotion for analysis. Wins feel pleasant, losses feel painful, and the mind equates emotional intensity with truth. If it feels good, it must be right. If it feels bad, it must be wrong. But trading doesn't operate on feelings. Trading operates on probability, and probability doesn't care about comfort. It took me a long time to understand how primitive this bias is, how deeply rooted in survival it is, how disconnected it is from the reality of financial markets. Humans evolved to judge decisions based on immediate feedback. If the outcome was pleasant, the decision was good. If the outcome was painful, the decision was bad. This worked in the wild, but it destroys a trader because the markets are not the wild. The markets are a probabilistic environment where perfect decisions can still lose and terrible decisions can still win. Yet my mind didn't know that. It kept using the wrong operating system to judge the right environment. And that mismatch was killing my potential. The first psychological driver behind outcome bias is the ego's need for validation. My ego wanted to feel correct. It wanted proof. It wanted confirmation that I was skilled, capable, intelligent, worthy. And wins provided that quickly, instantly, effortlessly. A win didn't just give me money, it gave me identity. It made me feel smart. It made me feel deserving. It made me feel like I was becoming the trader I dreamed of being. And so my ego began chasing that feeling. It didn't chase skill, it chased validation, which meant it wasn't looking for good decisions, it was looking for good outcomes. The second driver is the mind's desire to avoid pain. Losses don't just hurt the account, they hurt the self. Every loss feels personal, like a flaw, like incompetence, like proof that I am failing. But the truth is, far simpler losses are built into the structure of the game. Yet to the emotional mind, loss equals danger, and danger triggers defensive behavior. So after a losing trade, even when that trade was logically perfect, my mind pressured me to change something, anything, to avoid feeling that pain again. It didn't matter if that change damaged my edge. All that mattered was escaping the emotional sting of loss. The third driver is the illusion of short-term meaning. The mind hates uncertainty. It hates the idea that outcomes are influenced by randomness. It hates the idea that skill doesn't always produce immediate results. So it creates stories to make the world feel stable. If I win, I must be improving. If I lose, I must have done something wrong. These stories feel real because they remove uncertainty. They make the world feel predictable, but they are illusions created by a mind that prefers comfort over accuracy. The fourth psychological driver is something I once underestimated: narrative bias. The mind doesn't store raw data. It stores stories. And when there's a result, a win or a loss, the mind automatically writes a story around it. If I win, the story becomes you made the right call. If I lose, the story becomes you made the wrong call. But stories are not analysis. Stories are emotional interpretations. And the more emotional the outcome, the stronger the story becomes. One win can inflate an entire identity. One loss can undermine months of discipline. And the mind tells both stories with the same confidence regardless of logic. The fifth driver is the dopamine cycle. Wins trigger dopamine. Dopamine reinforces behavior. And reinforcement creates habit. So if I win on a bad trade, my brain rewards me for doing something harmful. And if I lose on a good trade, my brain punishes me for doing something skillful. This is how outcome bias rewires the trader's mind. Every emotional hit teaches the wrong lesson. It punishes discipline. It rewards impulsiveness. It strengthens fear. It amplifies ego. It distorts judgment. It destabilizes consistency. And little by little, a trader loses the ability to differentiate between luck and skill, impulse and intuition, process and outcome, growth and regression. The most painful part is that I didn't notice it happening. I thought I was learning, but I was being conditioned, trained by emotion, shaped by randomness. And because I didn't separate process from outcome, my entire trading identity became tied to the result of one trade. I remember times when a single win made me feel unstoppable, ready to size up, ready to break rules, ready to take on risk that I had no business touching. And I remember times when a single loss made me question everything: my system, my intuition, my discipline, my future. In trading, outcome bias didn't just affect my decisions. It affected my self-worth. It made me believe that the market was judging me. It made me believe that every result was a reflection of my value. It made me believe that my identity lived inside every candle that closed. Outcome bias turned trading into a cycle of emotional whiplash. High, low, confidence, doubt, hope, fear, hope, fear. I wasn't progressing. I was oscillating. I wasn't growing. I was reacting. And I wasn't evaluating my decisions. I was evaluating my outcomes. It took me a long time to see the truth beneath the noise, that a single outcome means nothing, that randomness is everywhere, that even the best setups sometimes fail, that even the worst decisions sometimes succeed, and that my evolution could only begin when I stopped judging myself by what happened and started judging myself by how I decided. In part 3, I want to take you deeper into the consequences, how outcome bias destroys consistency, twists discipline, and keeps traders stuck in emotional cycles that never end. The more I watch myself trade, the more I realize something painful. Outcome bias wasn't just influencing me, it was controlling me. It dictated how I felt. It dictated how I thought. It dictated how I behaved. And slowly it began destroying the very consistency I was desperate to build. Consistency doesn't come from wins. It doesn't come from lucky trades. It doesn't come from short-term results. Consistency comes from the ability to make stable decisions, regardless of outcome. But outcome bias makes that impossible. The first consequence I noticed was the loss of discipline. When I won a trade that I wasn't supposed to take, my discipline weakened. Not because I wanted to break rules, but because my mind mistakenly believed that breaking rules worked. Outcome. Bias disguised luck as skill, and my brain rewarded the wrong behavior. So I began taking trades based on impulse instead of structure. I began deviating from my plan because part of me believed I could trust the feeling I felt in that one lucky trade. I didn't see it then, but I was slowly replacing my strategy with emotion. That was the beginning of chaos. The second consequence was the erosion of confidence. There is nothing more damaging to a trader's self-belief than doing everything right and still losing. Because the moment a disciplined trade loses, the mind panics. And the panic whispers, if doing the right thing loses, what's the point of discipline at all? This is how traders spiral. A few disciplined losses and suddenly the entire system feels broken. The mind convinces you something is wrong, not because it is, but because the outcome wasn't pleasant. So you begin questioning everything. You adjust rules that didn't need adjusting. You tighten stop losses unnecessarily. You avoid setups you should be taking. You change systems after just a few losses. You try to fix what was never broken. Outcome. Bias makes every loss feel personal, and personal losses destroy confidence. The third consequence is even more subtle emotional imprinting. Every win imprints excitement. Every loss imprints pain. And slowly your trading becomes an emotional roller coaster powered by biological chemistry instead of objective reasoning. I didn't realize how deep this was until I noticed a pattern in myself. After a win, I felt energized. I wanted more. I traded more aggressively. I loosened rules. After a loss, I felt heavy. I traded cautiously. I passed on setups. I hesitated at the worst possible moments. I wasn't trading the market. I was trading my emotional residue. Wins inflated me. Losses deflated me. And the market responded to a version of me that was never stable. The fourth consequence was strategy drift. This is one of the most common symptoms. A trader develops a strategy, tests it, refines it, learns it deeply. But the moment a few losses appear, even rightful losses, outcome bias triggers panic and the trader abandons the plan. I was guilty of this. I changed systems more times than I can count, not because they were bad, not because they lacked edge, but because I couldn't emotionally tolerate the natural variance built into them. I mistook losing trades for system failure. I mistook randomness for a signal to change course. I mistook discomfort for danger. And every time I switched systems, I reset my learning curve to 0. Outcome. Bias didn't just hold me back, it erased progress again and again and again. The fifth consequence was one of the most destructive attachment to outcome. The more attached I became to the result of a single trade, the less capable I became of seeing the bigger picture. I started believing that every win mattered too much and every loss mattered too much. And when every trade feels existential, there is no space for clarity. Outcome. Bias turned each trade into a referendum on my identity. A win means I'm good. A loss means I'm bad. A win means I'm improving. A loss means I'm declining. But the market doesn't operate like that. The market punishes everyone sometimes. The market rewards everyone sometimes. The market does not care who is on the other side of the screen. But I cared. I cared far too much. The sixth consequence was something that took me years to see the destruction of long-term edge. Outcome bias is the enemy of probability because it forces you to judge your performance based on the smallest sample, possible one trade. But edge only appears over dozens of trades, hundreds of trades, consistent decision-making executed over long periods of time. Outcome. Bias tricks you into abandoning long-term thinking for short-term emotional feedback. It trains you to reject the very mindset you need to succeed. The seventh consequence is the emotional one. The one traders suffer silently. Self-worth becomes tied to PL. I didn't just feel good when I won. I felt worthy, competent, validated. And I didn't just feel bad when I lost. I felt inadequate, ashamed, embarrassed. I wasn't just losing trades, I was losing myself. Outcome. Bias blurred the line between performance and identity. And once the two merge, the emotional weight becomes unbearable. The chart becomes a mirror, and every candle feels like a judgment. This is the psychological prison most traders never escape. Not because they lack skill, not because they lack discipline, but because they never learned to separate process from outcome. I didn't know how to escape either. I didn't know how to break the cycle. I didn't know how to reclaim clarity from the noise of results. But eventually, I reached a breaking point. A moment when I realized I couldn't continue trading like this. A moment when I understood that if I wanted consistency, I had to stop treating outcomes as truth. In part 4, I want to show you the shift, the transformation that happened when I learned to judge myself not by wins, not by losses, but by the integrity of my process. This is where everything changed. There came a moment in my trading journey when I realized something had to change. Not my system, not my timing, not my indicators, not my strategy. Me. The way I judged myself, the way I measured progress, the way I interpreted every win and every loss. Outcome. Bias wasn't just a flaw in my thinking. It was the framework through which I saw the market. And until that framework changed, nothing else would. I remember the moment clearly, a quiet morning, screen's dark room still. I asked myself a question I had never asked before. What if my outcome doesn't mean anything about me? The silence that followed was uncomfortable, almost frightening, because for so long my identity had been glued to the color of my PL. If I wasn't my wins and I wasn't my losses, then who was I? That question became the doorway to a new kind of awareness. A new internal landscape where I began to understand that the outcome of a single trade says nothing about the quality of the decision that created it. And if outcome says nothing, then why was I letting it control everything? That realization became the foundation of my transformation. The first shift was learning to separate identity from results. I began telling myself something simple, something uncomfortable at first, but liberating over time. A loss isn't a failure. A win isn't success. A loss is just a data point. A win is just a data point. Nothing more, nothing less. The only thing that matters is whether I made a decision that aligns with my plan and respects my edge. That shift alone took the emotional weight off each individual trade. It allowed me to breathe again, to think again, to see the market without seeing myself in it. The second shift was learning to evaluate decision quality, not decision outcome. After every trade, I stopped asking, did I win? I started asking, did I follow my process? I stopped asking, did it hit target? I started asking, was this setup valid? I stopped asking, did I profit? I started asking, was my execution clean? This shift changed everything because suddenly I wasn't chasing results, I was chasing mastery. And mastery is built through behavior, not outcome. The third shift was creating what I now call process integrity. Process integrity means judging your decisions based on the information you had at the time, not based on the result you only saw afterward. If my logic was sound, if my structure was valid, if my risk was defined, if my execution was clean, then the trade was successful even if it lost. This was the mindset I had been missing for years. Process integrity freed me from the emotional chains of randomness. It taught me that a losing trade executed flawlessly is far more valuable than a winning trade born from impulse, because one builds my future, the other destroys it. The fourth shift was building a process journal. Not a PL journal, not a results journal, a journal of decisions. I wrote down why I entered, what I saw, what the structure was, whether I followed the plan, and what I felt during execution. And something incredible happened. Patterns began to emerge. Patterns in my discipline, patterns in my behavior, patterns in my emotional triggers, patterns I could never see if I looked only at outcome. This journal became a mirror one that showed me the trader I was and the trader I was becoming. The fifth shift was practicing emotional neutrality. I stopped celebrating wins emotionally. I stopped mourning losses emotionally. Wins became information. Losses became information. Nothing more. I stopped letting dopamine elevate me into overconfidence. I stopped letting fear drag me into hesitation. I learned that emotional neutrality is not indifference. It is clarity. And clarity is where consistency begins. The sixth shift was embracing probability thinking. Outcome. Bias lives in short-term vision. It lives in the illusion that individual trades matter, but they don't. Not in the way the mind believes. What matters is the sample size. What matters is the long-term edge. What matters is the consistency of decisions made over dozens, even hundreds of trades. Probability thinking freed me from the emotional noise of individual outcomes. It taught me that a single losing trade means nothing, and a single winning trade means nothing. Everything meaningful happens over time. The seventh shift was creating what I now call the Outcome Reset Protocol, a simple framework that recenters me after every trade. It goes like this. Did I follow my plan? Did the setup meet criteria? Was my execution clean? Is the outcome irrelevant? If I can answer yes to those questions, then the trade is done. Emotionally, mentally, completely. It no longer exists. It no longer defines me. It no longer has power. The final shift, the shift that tied everything together, was understanding this truth. Outcome is noise. Process is signal. And if I want to build a future as a trader, I must follow signal, not noise. I must judge myself by the integrity of my decisions, not the randomness of their results. I must build confidence on discipline, not dopamine. I must find stability inside myself, not inside the candles. I must respect the long term more than the short term. And I must measure progress by how consistently I honor my process, not by how often I win or lose. This shift didn't just change my trading. It changed my mind. It changed my self-worth. It changed the way I see the world. Because once you stop worshiping outcomes, you start recognizing truth. And the truth is this: you are not your wins. You are not your losses. You are the quality of the decisions you repeat. You are the process you follow. You are the discipline you choose. You are the habits you commit to. You are the integrity behind your actions. The market does not decide who you become. Your process does. And the moment you judge yourself not by outcomes, but by decisions, that is the moment you finally break free. If you've made it to the end, then you've already stepped into a different world, one where your value as a trader is not tied to the color of a single candle or the outcome of a single trade. Outcome. Bias used to define me. It used to control me. It used to judge me for things that had nothing to do with my discipline or my skill. But the moment I shifted my focus from results to decisions, everything began to change. I stopped fearing losses. I stopped worshiping wins. I stopped letting randomness become my teacher, and I started building something deeper, process integrity, the ability to measure my progress, not by what happened, but by how I acted. And in that space, confidence grew quietly. Consistency returned slowly. Clarity emerged naturally. Because the trader I am becoming is not built on outcomes. The trader I am becoming is built on decisions repeated with honesty, executed with discipline, reviewed without judgment. If this message resonated with you, if it shifted even one thought about how you see your own performance, I invite you to continue this journey. Here, we don't chase wins. We chase mastery. We don't judge outcomes. We judge process. We don't react to randomness. We learn from the decisions that shape who we are becoming. This is Mind Over Markets, and your evolution is already underway.